Welcome to the latest Motley Fool Scoreboard. I'm on Balloon. We've got longtime fools Jason Hall and Lou Whiteman giving a 1 to 10 rating to the solar company that comes up every time we talk about other solar companies. It's Enphase Energy, ticker symbol ENPH. Talk about the business first, including factors like industry and competition. A 10 is invincible, a 1 is hopeless. Lou's going with a 6. Jason's more bullish with a 7.5. Tell us more, Jason.
So I'm going with the higher score here because this is the one company in its space that has done two things. First, they've stayed really laser focused on what they're really good at, which is the panel level electronics that manage the power coming out of solar panels and things around it that support it, like batteries for the home and EV chargers for the home as well. And they've been really nimble in a hyper cyclical industry. It's brutal right now. Demand is down like 75%, but the long-term tailwinds are still really favorable. And management has built a business that is structured to navigate the changing landscape and still make money. We'll talk about that. We'll talk about that later.
Yeah, I really like this business. I guess what I would highlight is kind of some of the challenges. Jason mentioned the cyclicality, and yes, solar is choppy at best, so there is that weighs in on me. And also, I think there is some risk of commoditization here. Enphase, what they do, the kind of the picks and shovels for solar, it's very good, but there is competition here, so I do worry about that a bit. But it's a good business. Jason's right.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Lou's going 8, Jason's going 9. Why the 9, Jason?
The 9 is how well they've structured this business to navigate the cyclicality of the industry while still being built for the long-term tailwinds. There's a lot of concern in the industry right now with what's happening in the U.S. with a new administration coming in that may really gut some of the incentives out there for residential solar. But I think if you just look at how the company's navigated the industry compared to SolarEdge, which is its biggest competitor, and basically the other part of a duopoly for the panel level electronics in North America, SolarEdge has really, really struggled. While Enphase, again, even with residential solar panel sales down like 75% over the past couple of years, has generated free cash flow every single quarter. SolarEdge is 7 quarters in a row of burning cash. So just exceptionally well-run business.
Right. What Jason said, I'll even add to that, though. It's so easy to get caught up in the engineering chops for a company like this. And engineering is important. They need to know how to design and make this stuff. But for Enphase, what stands out, the capital allocation and cost control skills, which, as we said, in a cyclical industry, in an industry where there will be high tides and low tides, it is so important to get the capital allocation, to get what you can control right. And that's where management here really stands out for me.
Lou was scared to say the CEO's name. I'm going to attempt it.
Please.
Badri Kothandaraman.
Sounds
Maybe?
good.
Sounds good enough. Let's go with financials. A 10 is a fortress. A 1 is yikes. Lou's going with a 7. Jason's going with an 8. Let's go with Lou now.
So I just talked about like the ability to manage through ebbs and flows, and that's what you really see here. There's a solid balance sheet, more cash than debt. Yes, sales were down 30% plus in the most recent quarter. We talked about the cycle, but to remain solidly profitable and generating good free cash flow when that happens, I really like to see that. I like the cost discipline. I like that they're a contract manufacturer. My knock is back to the business question on commoditization, long-term pricing power, which could cause concerns about the financials down the line if things don't go well. But for now, no real complaints from me.
Yeah, I'm going higher with Lou. Again, talked about how exceptionally well management navigated the downturn from the financial side and really not risking the business when the cycle does turn by gutting it too much, but just positioning it better to be nimble. The balance sheet's actually stronger now than it was at the beginning of the year. And it's not just a bunch of inventory drawdown either. They've just run the business really, really well. The one thing I want to add that they've done exceptionally well is focus on contract manufacturing, and that has let them be nimble as a manufacturer. They're not tying up capital and maintaining that financial edge in a cyclical industry. That's been a huge advantage.
Jason, let's move on to valuation. How well will Enphase Energy stock do over the next 5 years? And how safe is it? 10 is a sure thing, 1's a lottery ticket.
So it's pretty obvious that I'm bullish here from everything that I've said, and I love the management team. I love what they've done, but I do want to highlight that there is risk. So my safety score is a 6. I think it's probably safer than most people expect because it feels like this is like the nadir of everything that's going on with residential solar. And maybe it is a touch more binary than some of my previous statements might make it feel. But the cycle is eventually going to turn. And I think that 15% plus returns may be a really higher probability than it seems. Just for example, from today's prices, we're recording this, if we get a 15% CAGR over the next 5 years, that's going to put the stock back to August prices, August of this year prices. So all we need is a little bit of indication the market is turning and solar demand to recover a little bit on the residential side. And this is a stock that could absolutely go on a big runner.
For me, this is one of these will they or won't they. This is a company that has a promising part to play in what should be a growth opportunity. The question is, will they be able to take advantage of it? I think they will. And so I'm at 10 to 15%. But I do think it is an open question. So my safety score is what I'd highlighted is lower. It's only a 4. It could go wrong, fools. And I think it's worth saying.
It's top at time, Lou. Is there a company you like better than Enphase?
So I'm going with Brookfield here, one of the Brookfields, BEP, because I believe in solar. I actually own Enphase. But if you want to bet on solar, I think you're safer going with a broader investment. Brookfield Renewable gives you exposure to a wide range of solar and other related activities. It just seems like the basket approach here is better. So that would be my thought.
Yeah, I'm not going to argue that too, especially if you want stability, predictability with the dividend growth that they have. That's smart. I just want to highlight why I think Enphase versus SolarEdge. SolarEdge might look like a bargain to people, but the business has some real problems they have to fix. While Enphase is fine. So if you're looking at this niche, I think Enphase is still the winner here. Defer to lose Brookfield Renewable if you're looking for a little bit safety and predictable total returns.
It's a pretty big win for Lou for getting a Brookfield company before Jason could snatch it. I mean, they could have agreed. But thank you to both Lou and to Jason. They've given Enphase an overall score of 7.3 out of 10. It's not the safest stock, but the rest of the scores are pretty darn high. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is a defense contractor. Till then, Fool on.
We did Brookfield on the bottom line this week. And yeah, Jason got to talk about it. So it's our first 5-hour broadcast of the bottom line.